In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. If you're joining us for the first time, welcome in. And if you're one of our many viewers that are constant, welcome back. We have a full complement of panelists for this episode of Eye on Retirement. To begin with is Johnathon McCoy of Market Advisory Group. Also, Pat Dougherty of Market Tax Services. From our Medicare department, Trey Basa with Market Medicare Advisors, and from Eidelman law firm, Gerald Eidelman. We've got a full show for you, and it's a real life story that took place in our conference rooms here at Market Advisory Group. The story is about Mary. And Johnathon, Mary had a $12,000 tax surprise when her former advisor turned her portfolio over and did not prepare her for the tax bill that was due on $45,000 worth of capital gains.
Right.
She also has rental properties in another state and was wondering if it made sense to keep the mortgage or refinance the mortgages through a home equity line of credit, and how best to maximize her money with those options. Now, Mary's 13 years older than her husband. How did Market Advisory Group help her to manage and minimize taxes and expenses along the way?
Right. So in Mary's situation, there's a wide variety of issues here, right? And the primary issue, the main reason she came to talk to us in the first place was opening up to this idea of the entire team being under one roof and understanding that the fact that her financial advisor, which, she'd been paying fees for years and had a pretty good relationship with the advisor. They'd done a decent job for her, made her some money, especially during the up years in the market. But when it came down to preparing her for what she was going to need from a cash standpoint on these taxes, it was a big sort of slap on the face in her situation where she had to find a way to come up with this $12,000 all at once at tax time. And she didn't find out that she was going to owe this until tax time, when her tax preparer at the time was the one that told her, hey, you had these $45,000 in capital gains. So when she originally had this conversation with her financial advisors, the issue was they didn't give her any time or any way to prepare for what this expense was going to be. And that's a constant statement that we're running around the office with these days is if something's going to cost you thousands of dollars either today or sometime in the future, when do you want to know about that? And our belief is that our industry is a lot of times falling woefully short of our clients' expectations from the standpoint of not having the tax team, Pat here with Market Tax Services, not having the estate planning team, not having the Medicare advisors. There's constantly things that are coming up, meeting with folks that have increased premiums on their Medicare insurance. So all of these unexpected issues are things that we're working to prepare people for so that they know when portfolio adjustments are made or when you make a decision to, say, sell a rental property or you need to protect your estate and your assets in the event that you pass away unexpectedly. In Mary's case, that was one of her main concerns was not having children. She wanted to make sure that her husband was not going to have to deal with any probate issues, but because they got married later in life, Mary was the sole owner of all of this real estate. So really a lot of interesting mechanisms in her situation going on, and the primary trigger to come and talk to us was, why in the world did I have a $12,000 tax bill and I didn't know about it ahead of time? And that's when I brought Pat into the room and we started talking about what is the more proactive strategy so that this doesn't happen to her again.
It sounds like what I'm hearing you say is that if somebody's out there working with an advisor and not having a whole team from the estate planning to Medicare to taxes, they're paying those fees for incomplete advice.
Yeah, that's exactly right. And we talk about in a lot of our other shows in Retire Hour as well as out here on iRetirement, the concept that a lot of folks that we talk to are maybe a little tentative to come and talk to a new financial advisor. One, because they believe that because we have this team that maybe it's more expensive, that we're going to send them a big bill just to come and sit down and chat. We were able to essentially identify a lot of these issues, why they were happening and what to do about it within the first meeting without charging her anything. So had she decided, thanks but no thanks, Market Advisory Group, thankfully for us and for her, we have decided to move forward and put a new plan together for her. But ultimately, she's not going to be paying us anything until after we've put that plan in place and she can say, this is exactly what I want. And then we move forward and having already discussed any kind of fees and things like that. In Mary's case, ironically, we actually saved her about $5,000 a year in expenses compared to what she had been dealing with, trying to shop around for an estate planning attorney, shop around for a new CPA, and shop around, in this case, for a new financial advisor.
Pat Dougherty with Market Tax Services. Jonathan explained that Mary's advisor was doing things that actually increased her taxes. Is that a common issue with people that you meet with?
Yeah, we see that quite a bit when people come in, and I've seen it quite a bit preparing taxes. When they just have a broker, the broker's focused on getting the maximum return for the client. And that's good. Everybody likes to make money, but they don't consider the tax ramifications. And there's ways to structure your investments to where you can minimize the taxes and still have good growth. And working with Jonathan and her, talking about all the different things, I think we're going to be able to achieve that.
Very good. Now, what was decided as far as her not getting any advice on if the interest that she paid on her mortgage and rental mortgages was actually helping her on her taxes?
Oh, there's quite a few things to look at when you're financing your home. She was using a mortgage or a margin loan to finance her home, and if you use a loan like a margin loan or a loan from a relative and it's not secured by the home, you cannot deduct the mortgage interest on your itemized deductions. So we filled her in on that. And as far as her rental properties went, she's able to deduct the interest there. A lot of people go into rentals knowing that they're going to lose a little bit of money in the beginning, but the value of the home is going to increase. So, you know, they're going to come out good at the end. But if your income's over $150,000, if you have losses on it, you don't get to take those losses in the current year. And I don't think she realized that. And so she's got all these losses that are building up and building up. She could take them when she sells the house, but they're no good to her in the beginning. And if you're into rental property to help lower your current income, and you don't know about those rules, it's quite an eye-opener.
And I could add just briefly to that in Mary's circumstance, the challenge was she was acting on, in carrying these mortgages and making these interest payments, she was paying between the three properties, her primary residence and two rentals, closer to $15,000, $16,000 a year in interest. And she was acting on outdated 10-year-old tax advice that she'd gotten from a previous CPA that she was no longer even working with that did not apply under the current tax code, understanding that most people, when the standard deduction was adjusted under the Tax Cuts and Jobs Act, and what we talked with her about with Pat, is that even with that amount of interest, with her standard deduction as a married person now and filing taxes jointly, that interest was giving her absolutely no tax benefit. So the only reason she was carrying those mortgages was to get a tax benefit and hold on to a little bit more cash. In her circumstances, she had the cash available in her portfolio to be able to pay off all of her properties and have essentially all of those rent payments coming in with no interest, no mortgage payments, and be able to sock away a lot more money over the next 5 to 10 years between now and when she retires. And it wound up in the long run, she was actually going to be somewhere between $50,000 to $60,000 ahead just in principal value of her investment. And this is something that she had not changed or adjusted, all because she had not gotten that updated tax advice.
Pat, do you run into that often with do-it-yourselfer type people that'll come in and, yes, they met with a CPA back in 2015 and that CPA gave them very sound advice at the time, but they're still operating off that advice that's several years old?
Yeah, we see that quite a bit. And some of the do-it-yourselfers, they're doing it themselves, they can't keep up with the tax code. It changes so much. I mean, when I first started, the tax book was like that big. Now it's like that big, you know? There's no way you can keep up with it if you don't do it full time.
Do you have a whole team looking out for your best interest when it comes to investment and retirement planning? And if not, what critical piece of information could you be missing that could end up costing you thousands? At Market Advisory Group, we practice the holistic approach to retirement planning, from the financial aspects to tax planning, estate planning, and Medicare advising. And we do it all under one roof for your convenience. If you'd like to set up a complimentary, no obligation consultation, our operators are standing by right now to take your calls at 316-252-8707. Again, 316-252-8707. And be sure and check out our website at ionretirement.com. We'll be back with more Ion Retirement right after this.
When people work with Market Advisor Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. Another thing that makes us unique is we want to meet regularly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisor Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, you know, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Hi, and welcome back into Ion Retirement. In this episode, we're talking about Mary, who was managing some rentals and ended up with a pretty big tax surprise from her former investment advisor. Trey Basa with Market Medicare Advisors. How does Market Medicare Advisors step in to help people plan to avoid penalties in Medicare and have coverage that they need for their retirement? In the example that we're speaking of, we're talking about Mary, who is only 58 years old. Her husband is older, or younger rather, at age 45. And if she retires soon, she'll need help setting up her marketplace insurance. Market Medicare Advisors will step in to help fill gaps and set up a proper timeline for filing for Medicare to avoid penalties, correct?
Absolutely. It's important that Mary comes in as soon as she even has some sort of idea of when she's going to retire, so she can find a marketplace plan best for her. Because if you go without health insurance in your retirement, you incur a penalty, and we don't want that to happen. Staying on top of that, staying on top of your timeline and making sure that you have an idea of how all of this goes is important to us to make sure that we collaboratively avoid those penalties.
Can a person come into Market Medicare Advisors in advance of wanting to set up Medicare so that they can kind of map out the course of action they need to take in the process?
it's always recommended. Come in, get an idea of what options you have for your Medicare, your health insurance, your Medicare in general, and then talk with us, get a timeline set out as to when the best time to retire, when we need to fill out paperwork, and approximately how long all of this will take. Coming in, talking to us, getting that figured out is always recommended.
And for people out there that are watching and they've been getting Medicare advice from Susie, who is really happy with her Medicare plan, one size does not fit all, correct?
No, yeah, I mean, you're right in that it doesn't fit everybody. It is an individualized plan. It is meant for you, one person and their needs. It is meant for that one person in their retirement. They're gonna hear a lot of stories from this, that, and the other, family, friends, and they're gonna hear a million different experiences. Take it with a grain of salt, but come in, talk to us, share those stories, and let's nail out the finer details and see what is going on with that story and what you could learn from it.
Getting back to Mary with Gerald Eidelman of Eidelman Law Firm. When the advisors at Market Advisory Group called on Eidelman Law Firm, in this case to organize her rentals and other assets, what were some of the first few things that were addressed by you and your team at Eidelman Law Firm?
Well, one of the things we needed to know is how was her current ownership of rental properties. That was one of the main things that was driving her to look to her estate plan to make sure that those assets would pass to her husband should she passed away before him, which was more likely since she was 13 years older. We needed to figure out who owned that property, what did we need to do with it, and make sure that the husband did receive it when he was passed away, and that that property would be given to the proper beneficiaries after both of them were gone. That required, doing a little digging, trying to figure out what laws apply, because different states have different requirements, and we had to figure out what do we do with this property, in this case, in Florida. How do we transfer it? Where do we put it? Do we put it in an LLC so that it's a single entity separate from her personal assets? All of these things went into play in trying to figure out what her estate plan should be.
Now, does a trust come into play in a situation like this?
Absolutely. I mean, people always ask me what's the difference between a will and a trust. And I tell people a will transfers assets after you're dead. That's all. It just makes a transfer and it goes to the person you designate. A trust can do much more than that. A trust can not only pass property, but can manage property while you're alive, but after your death. It can hold the property after your death and maintain it in such a way that it can benefit other people, so the rental property could continue to exist and the income continue to come in for her husband, for an heir after they're both gone.
So it basically can preserve the decedent's wishes past the grave.
That's right. That's exactly right. Most people can't control what happens once the money is given. With a trust, you can, because the money stays in the trust and you can direct how that money is to be used.
At Market Advisory Group, we have a whole team of professionals that go to work for each client to ensure that they're looked out for in their retirement planning, whether it's the financial aspects of investment planning, retirement planning when it comes to estates and how to decide how those wishes are set out, tax planning, or Medicare advising. We do it all at Market Advisory Group, and we do it under one roof for your convenience. Operators are standing by right now to take your call for a complimentary, no-obligation consultation at 316-252-8707. And be sure and check out our website at ionretirement.com. We'll be back with the final segment of this episode right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hi, and welcome back into Eye on Retirement as we wrap up this edition of the show. In today's episode, we've been visiting about Mary, whose experience has been to seek out estate planning, tax planning, and investment management all over town. And none of those professionals were communicating with one another. That left her trying to organize the plan herself and also left her with getting incomplete advice. Jonathan, how has the team approach at Market Advisory Group made all the difference for Mary in her planning?
Well, ultimately one of her primary concerns was in coming to work with a group like ours at Market Advisor Group is, how much is this going to cost? And when we compared this overall plan and this strategy to what she was going to have to pay an estate planning attorney, what she was already paying her financial advisor, what she was already paying just basically for her tax preparation, no tax planning, as is evident by the fact that she was surprised by this $12,000 tax bill that, while it was somewhat beneficial that she got some of those gains on her portfolio, wouldn't it be nice to know ahead of time if a $12,000 bill from the IRS is going to show up on your doorstep? Right. And ultimately, without having access to the CPAs, Pat in this case, the Medicare advisors with Market Medicare Advisors, and Gerald and his team at Eidelman Law Firm, we really have no way as financial advisors to put an entire financial plan together. And this is where I'm concerned for a lot of folks that are looking for financial advice across our industry, especially if you've been working with a lot of these kind of traditional big box stores that are on every street corner, is those financial advisors are equipped to do one thing well, and that is deciding and helping to recommend where your money should be placed in the market. And if that is the only sliver of this planning conversation that you're having with your financial advisors, you're missing all of this. You're missing the tax surprises. You're missing how do you manage your assets, especially in the event that you own real estate. What are the tax advantages or tax disadvantages? How do all of those things need to be managed together? And in the event that you pass away unexpectedly, having a plan put together from an estate planning standpoint is absolutely crucial. So if you don't have all of those professionals talking together, you're going to be sort of grasping at straws, and something is going to get missed, and it's going to cost you money.
So, Jonathan, I have to ask, does her new plan cost more than what she was putting together on her own with all these separate entities that she was working with?
No, actually, once we totaled it all up, she had gotten a quote from another estate planning firm in particular, but with her current financial advisory fees, plus what the estate planning company was going to charge her to put together a trust and a will, and they hadn't even talked, in this case, about an LLC, which is an appropriate way to manage her properties. All of that planning together was going to cost her somewhere between $5,000 to $6,000 more a year, with an additional few $1,000s in upfront fees to get some of the estate planning documentation together. So we were looking at nearly a $10,000 first-year savings and an ongoing savings of somewhere between $5,000 to $6,000 a year, having all of this advice in one place, as opposed to her having to sort of piecemeal this between multiple offices.
Pat, we talk about tax preparers, we talk about tax planners. When somebody comes into your office and you're meeting with them for the first time and they look at you very confidently and they say, well, yes, I meet with my tax preparer every year. There's a huge difference between somebody who prepares taxes and a tax planning professional.
Yeah, the difference between tax preparation and tax planning is like night and day. If you're getting your taxes prepared and you need to have them prepared, you bring in all your information to the tax preparer, they record the history that you had last year, and they tell you if you owe or you're going to get a refund. Well, that's nice. But if you do tax planning, We look at your entire, everything that's going on in your life, your current needs, your current income, your future income, how that's going to be affected by taxes. Even if you leave an inheritance, what's the tax going to be to your beneficiaries that you leave the money to? We look at all of that, and we try to do a tax projection, 3, 5, 10 years out, so we know exactly what's going on, and we update that plan every year when we meet with them before the end of the year.
And most importantly, help to avoid those tax bombs that can show up as a surprise.
Surprise avoidance is the key.
Yes.
Yeah.
Pat and Jonathan mentioned estate planning and Medicare are all included in a situation like this, and that costs extra, I'm guessing?
The tax planning and tax preparation for the majority of our clients that we work with does not cost much, if anything, extra. There could be potentially a small fee, usually less than what a lot of the tax softwares costs annually for the tax preparation. But the tax planning piece, we see that as a crucial and integral part to what we're doing on a financial advisory from a financial advisory perspective. So you think of the circumstance where her advisor had turned over this portfolio and told her, here's what we're going to do, here's where we think we can go seek more gains. Well, we can have that same conversation with our clients, but having a tax professional sitting by our side, we can also take the next step, which was missed in Mary's case, of saying, if we make these changes, here's what the IRS is going to charge you. Do you still want to make those changes? And if there's something else going on in her situation, whether it's cash management, maybe the savings account has gotten a little bit low, or maybe she had a vacant rental property for 6 months to a year, maybe doing some refurbishment on one of the properties and just didn't have that cash, that can have a direct impact on how we're managing the portfolio to make sure that she's got both the current available cash need as well as being able to take advantage of these market gains that we're all striving for as financial advisors.
Gerald, real briefly, as we're almost out of time, but when you go through the estate planning process with someone, how often should somebody have their will or their trust or whatever it is they have in place reviewed?
I usually tell people 3 to 5 years is the minimum amount of time you should go to review it, find out if any laws should change, because they do all the time, and see if any of the circumstances have changed that require making a change to your plans.
And there's ways for you to help avoid tax surprises in the estate planning as well.
That's correct. I mean, we look at all those aspects as well when we're doing estate planning. We want to make sure we cover the entire individual's life.
If you don't have an entire team working for you, you could be missing a crucial portion of information that could end up costing you or your heirs even down the road. At Market Advisory Group, we provide a holistic approach to retirement planning, and we'd love to set up a complimentary, no-obligation consultation with you. Operators are standing by at 316-252-8707. And check out our website at ionretirement.com. That's all the time we have for this week. I'm Rick Everett, here reminding you that we're here to keep an eye on retirement.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Foundations Investment Advisors, LLC, an SEC registered investment advisor.